In this video, you will learn how to recognize and avoid the most common trading mistakes. We will see what they are and how they affect us. And we are also going to have a look at some real trading examples. So make sure to watch until the end, and also don't hesitate to shoot your questions in the comment section down below. That's how we can help each other and anybody else who's also watching this video. Before we start, hit the like button and leave a comment so we can reach more people who will also benefit from our content. Subscribe to our channel and ring the notification bell so you don't miss out any of our future videos. Alright, now enjoy. In the first part of this video, we went through 5 of the most common trading mistakes that hold you back from becoming a professional trader. So if you haven't watched it, make sure to check it out as well by clicking the button in the top right corner, because you will find a lot of valuable information and understand how to avoid all those mistakes. Now let's carry on with a few more common mistakes and how to deal with them. The first one is the lower time frames, and that's related to some of the mistakes that we looked at in the previous video, mainly because of the over trading and the emotional trades as well. Now, when we're trading on the lower time frames, that means we enter a lot more trades and therefore we are going through a lot more emotions. Also, something else that you should know about the lower time frames is that you should expect a lower return, lower winning ratio. And that's because price moving with about 20-30 pips in any direction is something very common there, and that's also something that more times than not we're not going to be able to predict, right? That means price could many times reach your stop loss and then reverse and continue back in your direction. That's what we call a market noise. So trading on the lower time frames doesn't mean you will be more profitable. For those of you who are just starting out, I like to say that once you learn how to trade and analyze the market on the higher time frames, where you've got more time to prepare, only then you could go down to a lower time frame and take your skills there and possibly be successful. That way you will be trading with a specific strategy, routine that you will know how to follow. Like I said, when you're looking at the hourly or the 4-hour charts, you've got more time to react and to analyze. But when you drop down to 5 or 15 minutes, you will have to make your decisions much quicker, and that's why having more experience is an advantage. Also, something else that I've said in other of our videos is that you will have to have much more time available if you want to trade on the lower time frames. Alright, you can't trade for a couple of hours a day or just trade from your phone and from anywhere. And of course, trading on the lower time frames also means looking at the bigger picture from a higher time frame. For example, you identify the trend on the hourly chart, and then you go down to a 5 or 15 minute chart and look for what kind of opportunities you've got there. You shouldn't be looking at one time frame only, because obviously you won't know what is the main market direction. And that way you could get confused as to in what direction you should be making your entries. Okay? The second common trading mistake is trusting the indicators way too much. Of course, everyone has done it, and me personally, when I was a beginner, I also looked at indicators all the time. The one that I really liked is the MACD indicator, and we've made a video not long ago which you can check out later as well. I can even tell you that I was expecting that when I get a divergence signal from the indicator, I was always expecting that price will make a correction to the 23.6 retracement level, and that's how I blown my first account. And because I always trusted this indicator, I was adding to my position even when price was going against me. That's when I first learned not to trust the indicators that much, and also not to add to a losing position. And I'm sharing this with you because I know how easy it is to trust every signal that we get from a certain indicator, right? Now I'm planning to make more videos about the indicators, so comment down below which one do you want us to see, or is there any indicator that you're currently using? That way you will know what to be aware of specifically for this indicator, alright? Also, something else I like to point out is that all indicators are lagging. What do I mean by that? Let's say, for example, you open up a chart, then you load one of the most popular indicators, for example, the moving average. And what does this indicator give us? Well, it gives us the average price for a specific period of time, right? And then we expect that price will fall down once the indicator starts pointing down. Or if the indicator goes to the upside, we expect price to start climbing as well. So it basically gives us the average price for a past period. Now, especially if we're looking at a higher time frame and we add a moving average with a period of 200, which is also something that many people use, that means it will give us an even older data about price, right? Well, of course, it could give us some useful information as to where to look for support and resistance, but when it comes to identifying trend, I would say it's not that helpful. And so because of that, we have to add some filters, right? Now, how do we do that? Well, by using other indicators. And then what happens at one point, we've got loads of indicators on the chart, which doesn't really help us. So how does that look here on the chart? So we've got the moving averages. We then go on to add even more indicators, right? So let's say we've got some oscillators. We've just watched the MACD video, so we know it works, and we place it on there. We go for another indicator as well. Let's say the RSI indicator, because this is another very common one as well. Okay, there's another indicator that a lot of people like to use, the Ichimoku, this one here. Here we are, and as you can see, it becomes really difficult to actually see where price action is. We then open up a couple more windows to get even more data on our chart, right? Let's say the data window as well. And then, like I said, looking at price action like this here is definitely not helpful, because at the end it turns out we are actually analyzing the indicators when we should be analyzing price, right? I'm not saying using indicators is bad, but it's only helpful if you only got one or maybe two indicators, but having 10 indicators on your chart is something that will only confuse you rather than help you out with your trading, right? So what I suggest then is just using a default template, looking at the hourly chart at least, and of course anything above it, starting off with support and resistance, trend lines, the basics of trading, and you will see how quickly you're going to improve your results. Alright, because the chart that you saw just a second ago, if your chart looks like that, well then think about it. Think what you really use from all those indicators. What does really help you, and use only that. Alright. Now let's move on to the next common mistake, and that's trading the news. This is something that I can talk about a lot, and we've mentioned it in our courses and other of our videos, but I have loads of experience doing that, and to be honest with you, I don't recommend this as a main trading strategy. But why? because I would say this is a very aggressive style of trading. There are a few important things that you need to know about the news. Now, if we look for example euro dollar here, we had some high impact news not long ago, a few days ago, and if you look at this move right here, we've got a move of about 100 pips in a matter of 1 hour, right? Price then continued that downside move for a few days and it went about 250 pips to the downside, right? I mean, those high impact news cause big moves in the market. And sometimes you could even see 100 pips in the first few minutes during the news, right? And so seeing such a big move and you see that it goes in a certain direction will make you want to get involved in that move, right? Because you can possibly make big profits quickly. But just like you can make big profits, you can also lose big during such an event. Now, if you're going to be trading news, there's certain strategies and ways how to do it, but there's also a few things that you need to know first. All right, now first of all, during news you've got gaps. All right, you can see one right here, and in this case this is a gap that we can see, right? But also there are gaps that we cannot see. All right, now I mean, price goes down with a sharp downside move, and let's say if you want to get involved right here and you place your order, that doesn't mean that your order will be immediately executed. Alright, because if right here, let's say there's only selling orders due to the high volatility and due to the news, there's only selling orders, there's not a single buy order here, and then market skips a few ticks and it's looking for the next buy order, right? So you can make your entry right here, but then you can get in down here because let's say the first buy order is down here. And so what I mean is that if the first buying order is all the way down here after the gap, then that means any entries that you make between the gap and that order down here, they won't be executed. And so market will execute your trade all the way down here. All right, and this obviously changes your trade a lot. Okay, so this is something to pay attention to, gaps during news. Something else, in this case price goes to the downside immediately and it continues to the downside as well, right, which is great, but many times you will see that it could leave big spikes in the opposite direction before it actually continues down, right? And that's also called stop hunting. So any stops above this market structure, above this one here, will be triggered, which means if you have a sell order with a stop loss just above previous high, price will take you out and it will then reverse very quickly and basically complete your trade without you being in it. Alright, depending on the news and depending on the situation, market environment, even if your stop loss is up here or anywhere here, there's a big chance that you could be taken out before price actually continues lower. Okay, and then if you try to re-enter long and then price reverse, that's also very risky, because even if your stop loss is down here or anywhere below previous lows, like I said, because of the gap they might not be valid, and so price will continue falling while you're in that trade, losing money, and it will then activate your stop loss, like I said, at the next possible level. And of course another fact is that during high volatility news you will see wider spreads. So basically the expenses for your position will be higher and it will cost you more to trade during news. Alright, now there's another way where you can wait for the news to come out and then see if you've got positive or negative news for a certain currency, but what normally happens is as soon as you go back onto the chart, that move would already happen without you, right? So what you can do is to analyze why such a certain move happened, what exactly did they talk about during the news, and so on and so on. But like I said, it will be already too late. So always pay attention during news and know that people buying rumors and selling news is pretty much right. Another common mistake, probably the one that the most people struggle with, or at least I know I have for a long time, is breaking the rules. And here, as you can see, there's only one point, and it says the market doesn't forgive moments of weakness. Alright, so even if you manage to get away a few times with not following your rules and still made profit, trust me, this is not gonna last for a long time, because next time you will risk more because you think you will get away every time, and then the market will take all of the profit that you've made so far, sometimes even with one trade. Okay, like I said, I used to break my rules constantly when I was a beginner, and I always had to pay for it, because even if I make money on this trade, then next trade I take and break my rules again, very often it happened that I would give my profits back, and sometimes even more. So what I wanted to say is that this right here is a good example. Now I know people that traded euro dollar during this period of time here for about a couple of years, and as you can see, price is in a range, right? So having a little bit bigger account and trading this type of price action, basically buying when price reaches the bottom and then selling when it comes to the top of the range, that was going very well for quite a few people during that period of time, right? And so even if they traded and followed their rules at the beginning, like I said, this is a period of about a couple of years. They were making consistent profits, and then at one point they forgot about the rules, and then they started trading a lot more riskier, risking more money on each trade. They gained a lot of self-confidence, and so at one point you can see what happens. Market breaks out of that cycle, and so that puts them in a really bad position, in a big losing streak. And if you're in this kind of situation right here and you don't think about what's going on and try to adapt to that new market conditions, then you can really easy and very quick blow your account and basically give all the profits back to the market that you've made during this period of time, right? Because market works in cycles, and so one style of trading worked while market was in this cycle, but then it started trending, and so it requires different style of trading. Okay, now one thing that I've said before in some of our other videos is that if you're going to be breaking your rules and testing out new stuff, then make sure to do it on a separate account. You should have one account with a bigger amount of money. That should be your conservative account, and then if you want to trade aggressively and test out different ways of trading, you could then do that on a separate account, right? But yeah, those two rules, using a stop loss, always using a stop loss, and never increasing your risk while in a trade, are main rules in trading. Okay, so once again, breaking the rules will only bring in negative results, and the market won't let you get away with it. And then we move on to the last one, which I've seen many times as well, and that's when people have just opened a trading account and they expect that trading will be going well for them without having to put too much effort in. That's because they know it's not easy. They know that not everyone is profitable, but apparently they found something that no one has ever seen before. That could be an indicator which shows them what will happen at any point in time, if price will go up or down, and normally those indicators are based on the crossing of moving averages. Or they found a trading robot promising them to make at least 50% a month, and of course this is guaranteed to be profitable for a long period of time, also fairly cheap as well. Or they found a signal provider that guarantees them 99% winning ratio. I mean, all those stuff, as you can see, is something that doesn't require anything from us, and we would expect to start making profits as soon as possible. This is a very common mistake that leads to the fact that the bigger part of market participants are losing money. Whichever one you decide to believe and invest in, whether it be an indicator, a trading robot, or a signal service provider promising you to make 100% straight away, you will lose your money. What you have to understand is that if you want to be successful, you have to put in the effort. When we send out signals, we mainly do it because of the analysis that you get with them. For example, why do we expect a certain move? What is the bigger picture? Top-down analysis, upcoming news, and then you can decide if you want to get involved or not. You can also see our trade parameters, and of course you can then wait for a better level at which to get involved. But if you're always trying to find the shortest way, or if you're not planning to put in the effort, then you won't achieve any success. I know that most of those mistakes that we went through are due to all the false information that there is on the internet. But that's exactly why I'm making this video. I want to give you valuable and real information so you can see what it actually takes to achieve consistency in trading. So make sure to always analyze everything from your point of view, no matter where you get the information from, and have your own opinion about everything that's going on. Alright? And for everyone who thinks this video is helpful, then please share it with a friend, give it a like, and leave a comment down below. That way we can carry on making more content for you guys and to share all of our knowledge with everyone who watches these videos. Subscribe to our channel and ring the notification bell so you don't miss out any of our upcoming videos. Thanks for watching. Please don't forget to watch our last 2 videos where you can find more valuable information. Check out our channel for more trading related videos. I wish you all a successful trading, and I'll see you next time.